My name is Andrew Stotts, and I want to welcome you to another presentation by our Valuation Masterclass Bootcamp graduates. This company we're going to be looking at is the final in our series on energy companies, and it's Occidental, which is a fascinating story. So let's get started. Hold on. Are you ready to go?
Yes, definitely.
Yeah. And I suspect you've done a lot of work to get to this point, huh?
Yeah.
And I suspect there was a time when you thought, I don't know if I can make it to the end of this boot camp.
Yes, I almost got into the DOR teams.
Yeah,
Let's
you got
say that.
close, but you
Yeah.
stayed out. So that's the
Yeah.
key part. So
Mm.
now I'm going to share your screen for a moment here. Let me just bring the screen up. Hold on. All right, now we see your screen, and you're going to be presenting on Oxy, which is going to be interesting. And so I'm going to leave now, and then you take it away, okay?
Okay.
You ready?
Yes.
Okay, I'm leaving now. Take it away.
Hi, my name is V, and today my report is about another energy company, Occidental Petroleum Corporation, and which is recently in the spotlight because it was purchased by the Warren Buffett for his Berkshire Hathaway's portfolio. So, what's so interesting about this company that attracts our rate investor? Let's dig deeper into it. As I have researched so far, I initiate coverage on OC with a buy recommendation based on a target price of 69 US dollar, implying an upside of 32%. I derive my target price from a FCF based valuations using a WACC of 11% and a terminal growth rate of 2%. As you can see the chart at the bottom right, the OC has experienced a downward trend, and the last time the OC's share price crossed the 70 US dollar mark was in 2022, and now my target price is 69 US dollar. So what's the catalyst here for OC to raise back up like that? The first one is the strong operations and railroad acquisition drive oil production growth. And the second catalyst is a dominant position in the most cost-effective production source in the US. And the final one is a pioneer in the direct air capture technology should be future-proof. And there are some risks that we can consider like the high dependency on the volatile global and local commodity pricing, unexpected events in the development efforts and exploration activities, and the adverse effect of the government regulations. Let me introduce you about the background of the OC. OC, founded in 1920, is an international U.S. Energy company with assets in the U.S., Middle East, and in North Africa. OC operates through three segments: the oil and gas segment, with the main operation in the Permian, the trade basins, and the offshore Gulf of Mexico. And the second and third segment is the chemical and the midstream and marketing. In August 2024, OC completed a 12 billion US dollar acquisition of Proudrock, building scales in the Midland Basin. So let me walk you through the three catalysts that leads to my positive assumptions on the OC recovery. So, how do the strong operations and product acquisition drive oil production growth? In the second quarter 2024, OC production volumes came in at 1.2 million barrels of oil per day, which delivered the highest quarterly production in 4 years, and combines with the expected output average 156,000 barrels of oil per day from Proudrock. Hence, I expect OC total oil production growth to grow by both 6 to 7% per year until 2028, and also the revenue growth of over 7% during that period. And the second catalyst is a dominant position of OC in the most cost-effective production source in the US. It is the Permian, where its wells outpace the industry by 30% in production. And moreover, the addition of Round Rock's asset is expected to boost the Permian production with significant sub 40 US dollar break-even inventory and high margin output. And the last one is a pioneer position of OC in the direct air capture technology. The DAC market could reach the 150 billion US dollar annually by 2015, uh, according to the Bloomberg NEF. And OC has positioned itself as the leading supplier of offset of the AC offset. And recently, OC has signed a landmark agreement with Microsoft to deliver 500,000 metric tons of uh, over the 6 year. And I suppose that OC would benefit from multiple revenue streams. In the next few years when the DAC facility is operational. So let me show you the overall picture of the oil and gas industry. This is a growing industry with some external factors disrupting the well-established players. According to the company market cap, the industry is led by top players such as Saudi Aramco, ExxonMobil, and Chevron, with Saudi Aramco holding the largest market share at about 25%. And the oil and gas market value is projected to expand from 7 to 9 billion US dollar by 2028, despite external factors like geopolitical or the green energy support movement. And the next is the trend in the oil and gas industry. Investment in low carbon technology is expected to exceed the 250 billion US dollar by 2030, according to the International Energy Agency. And industry also shows the rising oil price potential amid high volatility risk. You know that the oil and gas industry faces the significant revenue volatility impacted by the oil prices, mainly affected by the geopolitical and supply and demand imbalances and renewables. But however, the oil prices are projected to experience a rebound increase by 6 to 7% by 2028. Let's look at quarterly result. In the first quarter 2024, the OC experienced a considerate revenue decrease, but pushed back up in the second quarter. And the company saw a 15% while year-over-year rise in the gross profit. The reason why behind a big jump on gross profit is because the increase in the revenue due to the higher domestic crude oil volumes and the prices. How about a consensus estimate of OC? Over 65% of analysts hold a neutral view on OC, and eight analysts have issued buy recommendation. The mean target price is 70 US dollar, which indicates a potential 35% upside. Let's look deeper into the revenue structure of OC. The oil and gas segment generated about 70% of total revenue. The chemical segment from Oxygen contributed about 19%, and the mystery and marketing generated the remaining portion of revenue. And in 2023, OC reported total revenues of 28 US dollar, a decrease of 23 from the previous year because of the lower domestic crude oil volumes and rise. According to the four elements of OC, fundamentals, momentum, valuation, and risk, OC appears unattractive relative to 1,810 non-financial companies in the USA. But you should notice that the OC is a cyclical company that it's a little bit not fair to compare with others not in the same industry. So the interesting here is I want you to focus on the valuation of OC, which ranked in the top 30% and it trades on low PP and PE, and also the risk of OC, which is ranked in the top 40% despite uh, high net debt to equity. As we can see in the world-class benchmarking, the profitable growth rank of OC has climbed from the number 8 to number 5 in the past 12 months. And this improvement comes from both the profitability and the growth, but mainly from the profitability. And the main driver behind the profitability is the expense control, which offset the low rank of the asset efficiency. And now we come to my assumption about forecasting the financial statement. I anticipate the revenue growth of 6% in 2024 and then increase to 7% in the remaining years. Total assets is also expected to rise as well as OC has a long expansion plan in the near future. However, long-term debt, I cut down the long-term debt because of the recent debt reduction plan of OC. The net income is anticipated to increase due to the growth of revenue, and almost the cash expense is on capex. I expect the gross profit margin to decrease a little bit to 35% in 2024 and increase to 36% in 2025. And the growth in gross profit margin led to the rise in net profit margin, and it reached 19, almost 19% in 2026. And here is my free cash flow data, which show a good demonstration about my story and also my assumption on forecasting. Regarding the relative valuation, as you see on the forward 2025 PP multiple, also looks slightly undervalued relative to the US energy sector, but more expensive in the Asia and almost in line with the local peers. I also forecast its return on equity to be over 17% in 2025, and will result in OC trading at a small discount base, which show that it's slightly undervalued. And on the forward 2025 PE multiple, OC trades at a significant discount and is expected to trade at a very cheap PE of 8 times. And I also expect the EPS growth to be positive in 2024 and a big jump to be around 48% in 2025. This results in OC trading at a significant discount compared to other peers. In terms of the DCF valuation, I assume a cost of equity of 13.5%, and I use a free cash flow to the firm because OC has significant capex for growth and may issue or repay debt regularly. In my base case scenario, I anticipate a gross margin of 35%, leading to a value of 69 US dollar per share. And for the optimistic case, assumes a gross margin of 37%, resulting in a target price of 72 US dollar. For the pessimistic case, the gross margin is assumed to be 33%, yielding a value of 66 US dollar per share, and you can see in this table. And the main risk that OC has to deal with is the high dependency on the volatile global and local commodity pricing. Prices are set by the global and local market forces, which are not in the OC's control. And the second risk is the unexpected events in development efforts and exploration activities. As you know, exploration is risky and sometimes delays and unexpected geologic conditions, which may result in significant losses. And finally, the effect of the government regulation changes. Government regulation can introduce new or amended laws affecting various industries such as drilling or manufacturing, and potentially increase the cost and limiting the activities of OC. And now, I to sum up, I suggest a buy recommendation on OC because of some reason. Like the first reason is OC is undervalued. The second reason is OC is has a great potential of oil production due to its operational efficiency and also a dominant position in the most cost-effective production source, the Permian. And the third reason is a leading position in the direct air capture technology, which gives OC the technological and environmental edge. So that's all my perspective. Thanks for listening.
Excellent. Excellent. One of the questions I had when you were presenting, it's not like this stock comes screaming at you, like you must buy this now. I do
Mm,
think it looks good, but you
mm.
always have to think, what did Warren Buffett see that I'm not seeing, right? I'm not seeing that it's like a screaming buy, but Warren Buffett obviously is much better than me. What are the things that you think he's seen in this company that he likes?
Yeah, I think he's like the good management. Yeah, when the management is like the effort of the OC management to achieve the debt reduction target is recognizable, and he see it, and also he values the shareholder return of OC. OC really consistent on the value return for through the dividends or the stock buyback. Yeah.
And can you go to the valuation page?
uh,
Just go up.
Valuation page.
Yeah, just go up,
Yeah.
go up. One more. Yep, right there. Let me just look at this. Go to the free cash flow page
Oh,
down below. Right. Okay. Let me just see this for a second.
mm.
This is the first company that we've looked at that has preferred shares. Were those preferred shares issued only for Warren Buffett, or were they already there? I don't remember the answer to that, but do you know?
I think that that's only there before Warren Buffett buy it.
Right. Okay.
Mm.
Um, and let's go up and look at the ratios for a moment.
The ratio.
Yeah, keep going up. Yep, keep going. There. Let me just look at this for a second. I was thinking that they may have had a higher ROE. If I look on the right side for the quarters, ROE
Mm.
is 16, 11.6, and 14.8.
Yeah.
Now let's go up to the FVMR slide and let's look at the fundamentals for just a moment.
FVM.
Okay. So if I look at, I'm gonna maximize this so I can see it here. So ROE in the past 12 months about 14.8. And I'm just curious, how much potential is there to increase the ROE? Do you think that if does it take oil price going up, or are there some other factors that you think could bring it ROE up?
Mm. I think it depends on the price and also the production as well.
Mm,
And
okay.
the price is the element that OC cannot control. So maybe uh, they can enhance the ROE based on the production, and also they uh, limit the cost of goods sold because they're good uh, at it. Yeah.
Okay. And for some of the energy companies, like in Europe, we hear a lot of talk about renewables and that type of thing. What is Oxy's position on that type of stuff? What are they saying? What are they doing?
Uh, Do you ask about the DAC, the direct air capture of
Yeah, I
technology?
guess is direct air capture their
Yeah.
method for doing renewable? Tell us more about that.
Okay. The direct air capture uh, is operate like it will capture the CO2 in the air and then pour the CO2 in the underground, and then OC has their technology to put the CO2 into their operational activities. Yeah,
Okay, so they're capturing CO2 and then putting it into their
yeah,
operation.
yeah.
Okay, interesting. And are they doing solar or wind or that type of stuff that other energy companies seem to get excited about?
No.
No.
That's the different. That's the difference from OC. OC just focus on the DAC technology and not on the biofuels or energy like that.
Okay. So how does it feel to graduate from the Valuation Masterclass Boot Camp?
I feel so great. As I said before, I'm almost on the GOR team. Luckily, I'm a survivor right now. I feel so happy.
How many hours do you think you spent on the whole boot camp?
um, Honestly, I feel overwhelmed in the first 2 weeks. Yeah,
Yeah.
and yeah, I spent almost 4 weeks to watch and rewatch your video and to understand because my English is not good, and this is on the English professional on valuation as well. So I I really glad that I have finished the valuation masterclass boot camp.
Um, you say your English isn't good, but you just did a great presentation and you created a great report. So
Thank you.
congratulations.
Yeah.
Yeah. And how would you describe the transformation? Like what's different about you today compared to 6 weeks ago when you started in the Valuation Masterclass Boot Camp?
Mm. I have to say that I I built my confidence a lot because before I used to work as an equity analyst, but I always feel my valuation result is um, I'm not sure about the result of my valuation at all. And then I come to the boot camp, I build my confidence, I build my valuation skills, and also my discipline as well. Yeah, I have learned a lot from the boot camp.
That, that's fantastic. That's exactly what I
Yeah,
want to hear. So congratulations. I'm going to take you out of this screen and I'll be back and talk to you in just a minute. So well done.
thank you a lot.
Yep. So, wow, that's interesting. I don't know that much about Oxy, and it was interesting to see, you know, it's like Warren Buffett wants a pure play on fossil fuels. That's an interesting angle that he's coming from, particularly when you compare these to the energy companies in Europe, which are just going nuts about renewables and the like. I wonder which ones will be better off in 1, 2, 3, 4, 5 years. Anyways, if you wasn't it great hearing about her transformation and how V basically built confidence, even though she had been an analyst before. She said she just didn't have the confidence in her valuation, and now she's got it, and she did a great job. So if you want to build a competitive advantage in company valuation, then join us at valuationmasterclass.com and join the next boot camp. My name is Andrew Stotts, and I'll see you there.